Matters is proudly brought to you by DCGsa, finding solutions to your debt problems. Talk to us for professional, affordable assistance.
Oh, can't believe I missed a payment. What if they come to the call? How do I get to work?
If you're feeling trapped by debt and missed payments, there is hope. DCGsa specializes in debt review services that protects your assets. Don't lose your car or your house. Start with a free assessment today.
Oh, free assessment. Maybe there's hope after all.
DCGsa, award-winning debt assistance since 2009. Call DCGsa today. 086 100 10.
This is what I need. It's time to make that call.
25 minutes before 5 o'clock. Good afternoon, Lingo family. Welcome to Money Matters, proudly brought to you by DCGsa. And I'm joined by our resident money mind, debt counselor, and all-round calm in the storm guy. His name is Casper Lagrange. Casper, welcome back. Always a pleasure having you, man.
It is always a pleasure, Mr. K. And how are you on this Monday?
Fantastic, absolutely fantastic. I've got no idea why I said that with a Southern American accent. But anyway, stranger things have happened on radio. We keep it moving.
Yeah, and I think today's topic is going to hit very close to home for a lot of listeners. So it's always good to be here when there's nice topics to chat about.
Okay, let's go. I wonder how nice it's going to be. So, Casper, you want us to talk about something called debt spiral. I mean, that sounds so serious, and it sounds a bit menacing, to be honest. What exactly is it?
It is very serious, Mr. K. And I think the scary part is that most people don't realize they're in one until it feels impossible to breathe financially. And that's the thing. If we don't talk about these things, and that's wonderful about the Money Matters program, is we get to talk about these things. And once you talk about it, you get to understand it better.
Yeah.
So a debt spiral happens when you're paying a lot every month, but your balances just don't come down. Interest eats your money first. And we tend to see that with overdrafts, with credit cards. You choose the bare minimum and you can't understand because you're paying it monthly.
Yeah.
But it just goes up and up and up. And your balances just don't come down. So it's tough. You're actually going backwards in most cases, or you are paying, but you are also taking more loans, or you're using more credit card debt. We're seeing people with third, even fourth credit cards these days.
Yeah.
So they're utilizing one credit card to pay another until they can't anymore. So the question is, or possibly, are you then using that credit cards to just float your fake salary? So what I'm saying by that is your salary comes in, you push it into your credit card, and you use more. So next month I'm 2,000 short, and then I pay it again, and now I'm another 2,000 short. Now you're actually 4,000 short from 2 months ago, and before you know it, it makes you feel you've paid the account, but I'm just stuck, and I'm actually in a worse off position. But don't worry, when my bonus comes, I'll sort it all out. Or when I get that increase, I'm going to sort it all out. And we never end up sorting it out. And then months like January comes along, the longest 3 months, obviously, of the year, that first month in January, and it's school fees. It's back to work. It's I need work clothes or shoes, or kids need shoes or bags, or even stationery.
Yeah.
And where do I get it from? Because my card's been maxed out, and obviously December happened.
Casper, silly question. You speak about 3-4 credit cards. Isn't there a limit? Why is that allowed?
You see, the thing with credit cards is, Mr. K, is people get it for rewards or for whatever, or they go from one bank, or it's been offered to them. The predicament is, on an annual basis, they can increase the limit without doing new checks, without doing a new credit assessment on.
Yeah.
So what you see after a couple of years is people are maxing out those cards. So now maybe I've got one with my bank, and then there's a new bank that offers rewards. So I get that because maybe my medical aid or whatever is with them. So now I've got that, and then my other credit card is starting to fall short.
Mm.
So I'm using the one that I just got for the rewards
To pay
now
the-
as a basic one. And before I know it, somebody else offers me one because then I get my food for cheaper, or I get my rewards there. So sometimes those rewards and those good to sound reasons why you got the card in the first place
Yeah.
was a good idea if you closed your previous card, but people don't.
Aha.
And then you start falling trap in the debt spiral. You're just using one debt to settle another debt. And I think lots of our consumers are sitting there. And unfortunately, the credit card and the overdraft is the target of my talk today, because those are the ones that really spiral, get the debt spiral going without us even realizing it, because we choose those bare minimum payments.
Yeah, no. So, Casper, people feel like they're doing the right thing, right? But like you alluded to earlier, the numbers just don't improve.
That's exactly it. And what often happens, you take another loan or you use a credit card just to survive for the month.
Mm.
And that's when things start to spiral, and the spiral really tightens like a noose around your neck.
Yeah.
Before you know it, credit card's maxed out. And then thank goodness in 2 months they're going to increase my limit with 10%. And then I max it out again
Sure.
in 3, 4, 6 months if we're lucky. And so people start living on that limit all the time, and they just do not get out of it, and they start taking loans. I mean, we're seeing credit providers, the Credit Association coming out warning people against that exactly. Don't take loans to pay other loans.
Absolutely. So, Casper, let's be honest. Let's speak honestly about this. How does this thing usually begin before it all spirals out of control?
Very rarely it's because somebody is reckless. Yes, there is those 1 or 2 cases, but they are in the minority. Most debt spiral starts with life. What do I mean by that? So things like a medical emergency. My medical aid didn't cover everything, or I needed to go to the doctor, but my funds have been depleted for the last month or so, or my kids got sick and I needed to take them, whatever that happens. And then car repairs, I didn't plan for that service, or my tires need to be replaced, I'm almost driving on the steel. Or a drop in income or job loss. That's something that we've dealt with a lot actually last year. There was lots of drop in income. We saw a lot of job losses. Now only one spouse is earning an income. What do you do? What do you do as a family? And then suddenly we've got access to this credit card, or they're offering this card now. Let me take it before that retrenchment or whatever. Or helping family that was in an emergency. Helping family has been a massive thing and in the last year as well. Or even just the rising food and fuel and electricity costs. Yes, we're seeing the Reserve Bank come out and say, well, inflation's actually less, but what about food inflation? I mean, food inflation is still sitting almost at 11%. Yes, fuel is coming down. Yes, the rand is strengthening against the dollar, but we rarely see that at the tills. We rarely see that. It takes time. And we're still dealing with this over 2 years of increased interest rates, increased inflation. And even now, I believe Eskom is going to get another 10.5% increase on electricity. So all of those 10%, 11%, people needed to take up, but they're not getting increases of 10 and 11%. They're getting inflation rated increases, so 3-4%. So over time, over these last 4 years, that has really dug into people's expenses, and the expenses rising and salary not as much, and then wanting to give your children the best. I think that's the most difficult part, is how don't you give your kids the best? And the best sometimes lead to overspending, even on items. Growing kids now, they want a brand new Adidas or Nike tacky, and before you know it, it's too small, and it's 3 months later. So now it's 2-3 pairs in a year suddenly because your child went into a growth spurt, and I wanted to give them the best, and that happens. Or those extra things after school that my child's good at. How can I cut back on that? We understand. Or we need to travel out of town a lot to go support our kids, and unfortunately, one unexpected event creates pressure, and then it's just a domino effect. And you just say yes to that first thing, and then 2 months later another thing, and then they give you the increase, or they offer you a credit card, another credit card, or increase on your overdraft, or that personal loan SMS that you got this morning just seems so perfect. It is the answer to my prayers. I'm getting this loan SMS. I need the money now. And it's just too easy. And before we know it, we're in this debt spiral.
Absolutely. And as you mentioned, as you alluded to earlier, actually, Casper, it's often survival spending. It's not always overspending. Sometimes you're just trying to survive, and you find yourself in a predicament.
Exactly. And once you miss one payment, the fees start, the interest increases, your credit profile takes a knock, and suddenly every solution becomes more expensive. And people don't realize it, missing that payment. If you then borrow, you are higher risk profile, and credit's all about risk. So the lower the risk, the better the interest rate, unfortunately. And in most people, now I've already missed a payment. So when I do get a loan, it's a very expensive loan, or the credit card that I'm applying for now is no longer 12 or 13%. It's now suddenly 18 or 21%. And that extra interest, that extra fees, because I'm a higher risk consumer, really becomes so much more expensive.
So, Casper, for somebody listening right now, let's talk early warning signs.
Great question. Red flags.
Yeah.
Red flags. We all hear the term red flags. So red flags, using your credit to pay other credit. I think that has been a highlight right through I'm seeing in the industry. Paying only the minimum installments, normally credit cards, overdrafts. For the listeners, here's a great tip. Your credit card outstanding balance or your overdraft outstanding balance, actual installment is 9.78%. It's about 10%.
Yeah.
So take 10%. So if it's 30,000 outstanding, your actual installment should be 3,000, not the 1,278 bucks the credit provider is deducting, because they work that technically over a 25-year term. It's like a home loan. So the minimum payments, paying only the minimum, leads eventually to you not being able to pay that back, and to it going to the max, and then skipping accounts to pay others. So we call it the hat method. We're pulling out 3 out of the 4 creditors this month, and those 3, they're getting paid, the other one not. Sometimes it's the other way around. Sometimes you can only pay one and we can't pay the other 3. So don't use that. Don't skip paying accounts. And then feeling anxious when your phone rings. I think that's a big one. Oh no, who's phoning? Oh, I hate my phone. When it rings, it's somebody looking for money. And then living month to month with no breathing room. I think one of the biggest things we picked up when we sit with financial assessments with consumers is when people are in a desperate situation, they start buying something simple like groceries on a daily basis. And that's actually the wrong way around. That is when things are going to become more expensive. If you go to the shop daily, you are going to end up paying 3, 4, 5 times, sometimes 8 times more than you would if you had a weekly or actually a bi-weekly plan. And, if you're consistently stressed about money, that's not normal. And it's not something to ignore. Something that I always live by. My dad told me this when I was a youngster. I begged to increase my pocket money.
Mm-hmm.
And he said, well, if you can't come out with 100 Rand, you must first learn to come out with 100 Rand. Because even if I increase it to 1,000 rand, you're not going to come out with that 1,000 rand.
True.
And that's something that really resonated with me as a youngster is, you need to first learn to come out with what you have. If you can't do that, then getting an increase or getting a bonus is not going to solve your problem.
Yeah. Absolutely.
Dealing with your current problem is coming out with that budget.
Yeah. All right. Shoot. Time. We need to get a move on, Casper. So, Casper, many people think asking for help means they've failed. Does it?
And that mindset is really costing families dearly. Asking for help is wisdom, not weakness. Proper financial assessment gives you clarity. You know where you stand. You only know where you're going if you know where you're coming from. Sometimes people don't even need debt review. They need structure, negotiation, or just a reset plan.
So it's all about selling a solution. It's not, sorry, about selling a solution. It's about understanding the situation, isn't it?
Always, and at DCG, we do the assessment with no pressure to apply for debt review or to force you to use our services. Knowledge is power, and that knowledge is in your financial assessment.
So if debt counseling is the right route, what does it actually change, Casper?
So it can mean that you only have one affordable monthly installment. You've got reduced interest rates by consent of the credit provider, so you're paying less interest. And then you've got protection from further legal action. No more garnish orders, no more worried they're going to take the money off my salary. Creditors deal with your debt counselor, not you. And you have enough money left for groceries and living expenses. And ultimately, that clearance certificate is a fresh start. So when a debt counselor issues that clearance, it deletes any negative data on your profile. You can, within 21 days, apply for vehicle finance, home finance, or maybe even that study loan for your kids' future. But timing is everything. The earlier, the cheaper, and it's always better.
Absolutely. Now, guess what? We always like to ground these conversations in scripture, don't we? So, give us that scripture for today.
Absolutely. James 1 verse 5 says, if any of you lack wisdom, you should ask God, who gives generously to all without finding fault, and it will be given to you. That's from James 1 verse 5. So money just decisions need wisdom, not panic, not quick fixes. Think about what you're doing, understand what you're doing, understand your situation, and then take it from there.
Right. As we wrap it up, Casper, final words to our listeners?
If this conversation stirred something in you, don't ignore it. I know the long 3 months of January is now almost at its end, but you don't have to commit to anything. Just start with a financial assessment. If that's the only thing you take home today, is do a financial assessment. Clarity today can prevent a crisis tomorrow. So, Mr. K, how can they get in touch with us when they call?
Couple of ways, of course. You can call 086 100 1047. Alternatively, you can email. The email address is help@dcgsa.co.za. And of course, you can WhatsApp as well, 061 432 8499. And you can also follow on Facebook, Instagram, YouTube, LinkedIn, as well as TikTok. Just search DCGsa. Casper, always a pleasure, man. Thank you so much for coming through. Have a blessed week ahead, and continue changing lives and helping people make better financial choices.
Thank you, Mr. K, and a blessed one to you and the listeners. Till next week.
Done and dusted. Blessings.
Was proudly brought to you by